Welcome back. You're watching Buy Now, Sell Now on ET Now, show where we get you answers for all of your stock-related queries. Remember, viewers, you can write to us on the number flashing on your screen. Do remember, each time you write to us, mention your name, the stock that you're looking to invest in, mention that name as well, along with the time horizon, the buy price, the quantity, in case you've already purchased the stock. And also, the time horizon is very key, because in that way, we will be able to guide your query better to our experts. We have Sharmila Joshi who's joining us on the fundamentals. We have Kunal Bothra on the technicals today. Once again, good morning to both of you, and let me kickstart with the queries then. And this one is coming in from Nikhil Sharma, who's writing to us from Mumbai. He has about 30 shares of Ambuja Cements, which he's purchased at levels around 677 rupees per share, Kunal. He wants to know whether he should stay put with this or hold on for the longer term. Since it's long term, let me come to you, Sharmila. Ambuja Cements, you think he should stay put with this one for the longer term? His buy price is exactly where the stock is currently at.
I thought then that's good. I think if the price that he's bought it at is at the same price, then I think it makes sense to continue to hold. This is probably the higher end of the band, very clearly. But if you're, this is one sector which is sort of directly moves in line with what is happening in the overall economy. So if you're expecting an overall impetus to come in the capital goods space, you are going to see more spending from the government in infrastructure projects, then cement is definitely the kind of sector that you should stay invested in. Having said that, I think the horizon that I'm talking of for him to make money from, since he's bought at a slightly higher price, could be a couple of years. So I really leave it to the investor. If he is willing to be invested in a cement stock for the longer term, then definitely he should stay invested in Ambuja Cement. As a disclosure, I own the stock and I'm not going to sell.
All right, that's the take on the cement pack. We're moving on, and Kunal, the next query that I have is coming in from Venkati. He's been holding Lakshmi Organics, 300 shares, and his buy price is close to 400 rupees. It's been 4 years that he's into this investment. What to do in this one, Kunal? At this price point, sitting at a huge loss, should he go ahead and average out some bit of it, or move out of this one at all?
No, I think you just stay put with the stock, because typically what happens is, after such a kind of a long gestation period where the stock consolidates, remains sideways, goes into a downtrend, etc., you eventually see these stocks getting into a recovery mode. Now the good part about the stock, first time which I'm seeing on the monthly charts, is one of the parabolic SAR indicators, and from 2022 highs when the stock was almost at 555 60 odd mark. From there, the first time the stock has confirmed a breakout of this parabolic SAR indicator. So I would probably believe that it looks attractive, continue to hold.
All right, the next query that I have is coming in from Karthik, who's writing to us from Bangalore, and he wants to know whether it makes sense to go ahead and buy these defense kind of counters right now. Actually, Sharmila, he wants to know whether he should buy Cochin Shipyard or Masgon Dock or Garden Reach for a good profit for the longer term. Do you think that they will give you some more profits?
I'm going to dodge that and pass that on to Kunal, because honestly, fundamentals from a valuation perspective, I can't answer that question. But investors are liking the stock, they're liking the sector. We are seeing a sort of a run up. I think let him answer that.
But Sharmila, in one word, if you had to tell the valuations, is it justifying or unjustifying right now, given the fact the sharp rally? Fundamentally, right now, you don't see any merit to buy, given the fact that they've already risen. The valuations are too steep, isn't it?
Two things I want to say very honestly. Like, one is that nobody in this market is looking at valuations. I read a very funny tweet the other day that said that 50p is the new 5p. So that's how people are treating the market. Nobody is looking at what valuation a stock is trading at. The second important, so from that perspective, I don't know whether you should be looking at an XYZ stock based only on the valuation it's trading at, because there are a lot many other factors that are sort of driving stock prices up. Having said that, when it comes to the defense space or railway stocks, I just want to say that, what you need to understand is that while they are getting orders and their order books are very healthy, the gestation periods of such orders is typically very long, and it takes, what that simply means is that for it to reflect in the profitability, there will be some time. Number two, these stocks have already gone up a lot. Defense stocks are up, 2.5-3,000%. So that is another factor that you need to keep in mind if you're making a fresh purchase. And the third very important point is that if you really ask me, I have not seen two sort of consecutive bull markets where the sectors that sort of sort of gain the most are the sectors which gain the most in an earlier cycle. Having said that, this time could be different. So, which is why I said, let me just dodge that question and pass it on to Kunal. Maybe the charts will throw better light on what is happening in this sector.
But I'm glad actually you gave your explanation as well, Sharmila. You know, this is what everyone needs to understand as well. So you brought out pertinent points when you talk about fundamental analysis of companies, and also like you said that these were the winners in a bull market cycle, and let's see if they continue. But Kunal, since she's dodged the question to you, you will have to take it now. These three counters, Garden Reach, Mazagon Dock, as well as Cochin Shipyard, have had their fair share of rally. They've seen some sort of correction, then they've rallied back again. What's your take coming in on these? Do you think there is scope to make some more profits?
Difficult one to say that, of course, and thank you, Sharmila, for passing on a bouncer. But then, I believe what you have to ideally do in this case of in this scenario, so because there are two time frames which happen, and we've seen historically over the last 20-25 years. I'll give you an example. Like Bajaj Finance, in I think 2000 2001 was a stock which was almost at 5 odd rupees. From there, the stock multiplied in 2013, I think, approximately to 150 mark. It looked very overbought because the stock had rallied 30x when you look at it from the lows. But if and from 150 levels, we've seen the stock rallying up to 7,500. So just to give you a broad example, that if there is quality which gets merited into stocks or into sectors, and if there is a long story ahead, say 10 years, 15 years, 20 years plus kind of theme which gets attached into these names, we've seen that these stocks which may look a lot more overbought on the short term charts, they would continue to rally more on the longer term basis. So all you have to look out for is if these stocks and the sector rallies up for or see some strong fundamental news flows consistently over the next 5, 10, 15 years or so, then there could be more built up in terms of price action. But yes, short term wise, these stocks are overbought. You look at the quarterly RSI, it's at 93 for a stock like Garden Reach, and similar 90 plus levels on the monthly, daily charts as well. So to initiate a fresh buy is very, very risky. But as I said, you could probably go for a buy on dips strategy if the stocks correct by 10-15%. That could be a good starting point.
All right, so that's the detailed analysis on all these counters. But Sharmila, let me help you with a simple query, and this one is from the power sector, wherein Hamsa wants to know that Tata Power, which she's already holding from a price of 270 rupees, can she go ahead and add more at current market price? And any targets that you have on the same, please do share.
Yes, I think that is an easier question and an easier stock to answer. So yes, this is a sector that I like and a stock that I like within that space. I think the key thing for me that has changed for a lot of the power stocks is that anybody who has some initiative or some project that is coming up either in the renewable energy space or something to do with electric vehicle batteries is seeing traction. And I think Tata Power has spoken about trying to build capacity in both these. So I think definitely continue to hold what you have. In terms of targets, I think honestly, maybe we are almost there. Targets could be closer to 470, 480.
All right, this next one is coming in from Manish. She wants to know about Syngene, and this one is also for you, Sharmila. In case you track Syngene, what Manish is saying that it's underperformed compared to Newland Labs, even though it is a leader in CRAMS. So he wants to know what should he do with Syngene, which he's holding 1,000 shares at a price of 650 rupees per share. He's making marginal profit, but on the fundamentals, do you see that this any reason for this underperformance vis-a-vis Newland Labs?
So I have not really compared it, but I will say that since this is a player in the gram space, you do see sometimes these moves in the pharma space where they move sort of sideways because the sector or the vertical that they are concentrating on may not be giving the kind of returns that we had built in. Having said that, I think this is a fairly decent stock. The numbers are good, valuations are decent. So I think definitely stay put. Maybe you could see targets of around 8 28, 30 sort of levels and revisit the stock at that stage. But honestly, I haven't really compared it with units, so I don't know why it has underperformed units.
All right, Kunal, the next query that I have is coming in from Kashyap, and he wants to know, can he buy Tata Communications for a long-term investment, maybe for the next 18 to 24 months at this price point?
Well, yeah, I think it could be a good strategy because it's come back above its long-term averages. The stock is forming a bullish flag kind of a formation on the daily charts. Of course, the breakout is still pending for Tata Communication, but typically when a stock gets into a recovery mode and manages to surface above its long-term moving averages, and even if it goes through a time-wise consolidation, when the market drifts slower, we generally expect that that could be a good relative strength or a stronger stock relatively. So I think in that aspect, I would suggest to hold on to Tata Communication as well as look to buy at current levels. The breakout zone for Tata Communications is around the 1950 mark on the spot basis. So once that happens, we could be looking at the stock coming back to its 2023-24 highs, which should be at 2050-2100 levels also.
All right, on that note, we'll slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll continue taking your queries. Don't go anywhere.
Welcome back to Buy Now Sell Now. Let's keep it going with all your stock related queries then. And the next query that I have, Sharmila, is coming in from Nikunj Poddar, and he wants an advice on Avental. I'm not sure whether I tracked this one or not, but he's holding 300 shares from a price of 219 rupees. He's a long-term investor and wants a view on this one.
So from a valuation perspective, the stock is looking expensive, but overall, given the kind of sector that it's in, and again, I think over the last couple of years, the stock price has also moved up sharply. So I would say stay invested with what you have, but definitely I think keep a watch on it. My targets would be closer to 210, 250, but revisit the stock when it gets to that level.
Right, this next query that I have is coming from Anil Malhotra. He has two queries. One is on Mankind Pharma, Kunal. He has about 450 shares, which he's purchased at 1,148 rupees per share. And the other one being Polycab, he has about 250 shares at a price of 6,250 rupees per share. He can hold on to it for the next 2 months. What sort of a target can he look at for both of these counters? He is sitting in profits.
So I think for Mankind, I think the 200-day moving average seems to be a good support. Very recently, I think 3 days back or 4 days back, the stock had retested this average and then bounced back. That level I think is around 2,055 for the stock on the spot level. So keep that as a trailing stop loss for Mankind. And same would be the case with the other stock which you mentioned, that was Polycab, yeah, because even this stock has done exceptionally well. In fact, for Polycab, what I would also suggest is that if it dips down to say 6350 levels, that could be a point where you may look to average further, because I would sense that the stock is coming back into an oversold nature of indicators. So another 2% down from current levels, I think would be a better risk reward to maybe go for a fresh buy or at least an add further.
All right, Kunal, the next query is coming in from Pradeep. He's been holding Central Bank of India, but from a price of 28 rupees. He is indeed at a good profit, but the stock hasn't done much in the past couple of months now. What's your take? Should he stay invested or maybe move out and look for better opportunities?
See, I think I'm sure you've been patient enough with your holdings on Central Bank, and if you've bought at 28 odd rupees, then I'm sensing that it's almost a 1.5 year kind of an investment, if not more. Now, I think what we've seen the last 6-8 months is that many of the PSU banking stocks, the mid-cap ones, are going through a time-wise consolidation that may extend another couple of months for these PSU banking names. But when the second round or another round of a breakout happens, then these stocks, they have a tendency of going into even 30% to 40% rally whenever the next breakout happens. So I think rather than being a bit impatient over here and shifting on to another stock where you might see these gains topping out, I think it's better to wait out for a stock which has consolidated. What you may also do is maybe trail your stop losses in case if there is no major weakness which creeps into the PSU banking names. Then I would probably suggest that keep a trail stop loss. Say 55 could be a good trailing stop loss. If the stock closes below this level on a weekly basis, that could be a point where you will look to exit.
All right, this next query that I have is coming in from Tushar, and Tushar is actually writing to us. This one has come from Akhil, Akhil is writing to us from Delhi, and he wants to know about Tata Technologies. He wants to invest in this counter for the long term. Sharmila, and his long term is just 1 to 2 years. What should he do? Should he look at Tata Tech right now fundamentally, or any other mid-cap IT companies that he can look at?
Definitely, I think you can look at Tata Tech. I think a little while earlier we were talking of sort of niche plays, and to my mind, this is one of those. We did see the stock run up to much higher levels, post IPO, etc. Now things have sort of quietened over there, but the numbers are good. Valuations are looking decent. But as you said, I think maybe 1 or 2 years could be sort of an okayish time frame. We should probably extend it. And then I think definitely Tata Tech is a stock worth looking at.
All right, Sharmila, once again coming to you, this query is from Shashank from UP, and he's concerned about his Raymond holding, because Shashank, today their realty as well as their Raymond lifestyle business, there was a demerger that was already announced earlier, and the Hive-Off unit of the Raymond lifestyle is expected to get listed in a month's time, and that's why you are seeing that particular fall. But Sharmila, given the existing holding in Raymond, do you still believe that it's a good company to hold on, and given the kind of a run up that we have seen in this stock, can he go ahead and add more?
I think definitely don't add. But overall, if you ask me, both the sectors that they're sort of split companies will be in real estate as well as textiles. I'm positive on both those sectors. I'm not very positive on the company per se, but I'm positive on the sectors. And now the stock has run up and the split has happened. So ride it and see whether that brings you any further gains. But definitely, I am not in favor of adding further.
All right, this next query is coming in from Indu, and this one is for you, Kunal. She wants your view on the entire PSU Banks. I'll read her message as she's written. She's saying that the index and some of its constituents seem to be forming a head and shoulder pattern. Is it expected to go into a sharp correction? She's already holding PNB, Canara Bank and Bank of Baroda, and they all are at more than 80% profit. So what's your view coming in on the entire PSU pack, and what are the indications coming on the chart?
So I think first on the inverted head and shoulder pattern on the Nifty, I'm assuming if that's what you are trying to indicate, I think it's a very short-term pattern. It's almost like a 200 to 50 pointer. So trying to extrapolate a bigger downtrend could be a bit tricky given the way the pattern is shaping up. On the PSU banking names, we've seen the PSU banking stocks underperform. In fact, I did a relative strength analysis study for many of the PSU banking names from the June highs, where the index had made a first multi-week, multi-month high or an all-time high levels for itself. So I think from that point, the PSU banking index had gone to a correction. I think it corrected by a margin of 7% to 8% till a couple of days back. My belief is that the PSU banking stocks are already going through a round of underperformance. That's what I was flagging off earlier for Settle Bank as well, that many of these PSU banking stocks, they may drag for some more time. If you're sitting on a profit of 50% plus for many of the banking names, you may do a two-pronged strategy over here. One is to try and maybe book out partial profits over here for the list of PSU banking stocks which you have. And in case if the fall aggravates for many of these banking names, then I believe that if there is a further correction of say broadly 10% for the individual banking stocks, look to buy them back again.
All right. Actually, when she spoke about the index, she meant the PSU Bank index, Kunal. So is that what?
Yeah, the PSU banking index.
All right.
That's what I was saying.
All right, no problem. Shrishti?
All right, then shifting gears to the FMCG pack now. And Kunal, Vidya is a short-term trader, and he wants to know, is this a good time to enter into FMCG sector now? And if you can help her with two of your top recommendations from this sector.
So yeah, I think looking at the short-term charts, it looks like that the the FMCG sector is going into a turnaround of sorts. Two names which I would be bullish on from current levels. One would be Britannia. I think that stock is looking attractive at 5,700 odd levels, where it's trading right now. The momentum seems to be very strong, and looks like that the stock could be at a cusp of a decent medium to maybe even a longer term uptrend from here on. And the other name would be Dabur. I think that's a chart which has started to look very attractive at 620, 25 odd mark. So these are the two names which you can look out for. You may also consider looking at Tata Consumers, but in case of the stock drifts down by a margin of another 50 points to 70 points, that would make the trade a lot more attractive for Tata Consumers, where I would believe closer to 1100 or 1080 could be a very good level we can look to chip in.
All right. This next query that I have is coming in from Venkatesh. He's writing to us from Indonesia. He wants to know whether he can buy ITD cementation for the next 3 years at current price. Sharmila, do you think the price right now for ITD cementation is fine, looks good to accumulate for the longer term?
So the good thing is that he's looking at a 3-year horizon. And the bad news is that the valuations of ITD cementation look a little stretched. So while the stock is good, numbers are good, I like the sector. Possibly wait a bit and try and buy it if the stock corrects.
All right, buy on dips could be the strategy for this counter. But Kunal, what's your take on AB Capital? Mahesh is a senior citizen holding 950 shares from a price of 201 rupees. But since the stock is seen to be, the momentum is seen to be fizzling out, is that a hold or exit? He can still hold for the next 18 months.
So yeah, I think if 18 months is a time frame, then you can continue to hold on. What we are seeing right now is many of these, FinServ stocks, they are going into their own phase of, correction. I would probably call it as a mean reversion rather than a correction for these names, because when you look at the longer term charts, they are still very strong for names like AB Capital. So it's a process of mean reversion. The fall or the selling may probably extend for another few percentage points till the time these stocks come back into a demand zone. I would believe potentially 218 to 22 could be a good zone of demand for a short term basis for AB Capital. So maybe over the next few weeks these stocks can drag a bit more. If in case you are looking at just trying to encash on the potential correction, you may look to sell now and then buy back again if the stock drifts into the buying range which I just mentioned.
All right. This one is coming in from Sarma, who's writing to us from Hyderabad, and she wants to get a technical view on HDFC Bank. Kunal wants to know what's the resistance level.
So I think when the sell-off happened for HDFC Bank almost a week back, when the stock was at 1750, 1790 mark, I had mentioned that the stock would probably drag down to the 1600 levels. And the gap which has been formed for HDFC Bank, now that gap should act as a major resistance for the stock if in case there are any rallies in between. That level for HDFC Bank is around the 1685 to 1715 mark. So I think this could be a major resistance band for HDFC Bank. And I also believe that I think the approach for the stock now for traders for the stock has to change, because earlier it was more of a momentum breakout, and we've seen that approach has not worked out very well for HDFC Bank. So rather than chasing the stock on momentum, it's very good, a potential could be a very good strategy to try and buy these stocks when it comes towards its support level. 1550 to 1600 could be a good short-term support for HDFC Bank in that aspect.
All right then, Kunal, the next query that I have is coming in from Praveen, and he's been holding one of the breakout stocks today, and that is SCI. His buy price is 277 rupees, sitting at great profits, but can he hold, what to look out for in the next 3 to 6 months?
Well, yeah, I think continue to hold on to the stock, because after today's price volume uptick, it looks like that the stock has upped its base or support levels yet again. From earlier support point of 250, now we can expect 275 as a good base for the stock. And assuming if it crosses the levels of 350, then we can raise the stop losses to 325 as well. So as of now, 275 seems to be a good trailing stop loss. With that, continue to hold on.
All right, I think Sharmila, you will be okay to answer this next one, because this one also is a candidate like the rest of the PSU Bank, which has actually seen a sharp rally. This one is coming from Chakravarti, who's writing to us from Vijayawada. He has Chennai Petro in his portfolio. He has 50 shares. He bought it at around 391 rupees per share. He is admitting, and I believe he's happy as well, he's made spectacular profits in this one. So he wants to know whether he should hold or look to book profits now.
Well, from a valuation perspective, it is looking a little expensive. But given the fact that their numbers have been fairly decent, I would say, and he's sitting on very good profits, so there is no reason to sell the stock. So I think stay put. Especially if you're a longer term investor, I think definitely you can continue to hold. I think it is almost trading at its 52-week high. So it's and from a valuation perspective, as I said, it's most of the positives seen factored in. But given the fact that the company is good and the business is good, I think you can stay invested.
All right, that's the take on Chennai Petro. But with this, it's time to slip into a very short break. Don't go anywhere, viewers. We'll be right back.
for all of your stock related queries. Let's continue taking your queries then, and this one is coming from Balan. And Balan wants to know a couple of stocks, Kunal. That one is Swan Energy, Schneider Electric, Maruti Suzuki, where he's making good profits, approximately 20 to 25% in these counters. Should he look to exit or stay put for the next 6 months?
I think you should stay put for another 6 months. The stock went through a bit of a tough time, I think, recently in terms of price correction from 750 levels towards, I think 540 or 550 was the low the stock had made. And now it's trying to make a comeback. Volumes have started to look attractive for Swan Energy, which means potentially that if the volumes participation increases further, we may look at the stock breaking past over the previous highs of 780 and then continue to move up higher. So I think even if it's a short-term play, you could be looking at a potential 60 to 70 point upside for Swan Energy. And from there, I think if the volumes increase, as I say, that you can probably try and trail your stop losses and continue to ride the trend for much higher upside.
But what about Maruti and Schneider, at least for Maruti?
Well, Maruti is a tricky stock, frankly, because the stock on the news.
Is that why you skipped answering it?
Yeah, that's exactly the point, because it's a tricky name. The stock. I think recently there was some news flow for the stock. It was up some 6-7%, and then the next couple of days you've not seen the stock showing any kind of a major follow through. Now it generally becomes more of an event driven stock. And I think that becomes a more tricky aspect to try and buy the stock on a breakout. So it's best to try and buy many of these auto names as such, especially large cap auto stocks, when these stocks consolidate. So in case if Maruti drifts down to 12,000 levels, which is another 800 points from current levels, that could be a very good level to buy.
And if someone is already making a profit, you think it's a long-term story stock? Do you?
Yeah, it's a long-term, without any doubt, it's a long-term story stock for many of these large cap names. But I think just as a timing play, 12,000 could be a good play.
All right, moving on to the next one. And Sharmila, what's your take on Vun Beverages? M. Methivanan is already holding the stock. His buy price is 500 rupees. It's more than 3 times for him right now. But good to stay put, or maybe book out some profits and look for other opportunities where he can get that alpha.
Well, booking out is not a bad option given the fact that he's making so much money. But honestly, given the business the stock is in and what the prospects going ahead, I don't really see any reason to sell it. Valuations do look a little expensive at this point in time, and he has got it at good levels. So if he, from that aspect, he just wants to sell it and buy something else, that's a different thing. But as such, I think you can stay put in Vun Beverages. I don't think you need to be in a hurry to sell.
This next query that I have is coming in from Subramaniam from Chennai, and he has Manipur Finance, Kunal, 65 shares at an average price of 146 rupees per share. He wants to know what's the outlook. Can he accumulate some more for short-term gains in Manipur Finance? He's already making good gains.
So you may hold on to the stock. I don't believe that adding further at current levels could probably be a good strategy. The only reason for that is because the stock has a very short shelf breakout. It tends to get into a breakout for a couple of days. We saw that in say end of June when the stock moved from 190 to 210 to 12 levels. From there, the stock went into almost a 7 to 8 days of correction. Again, recently, yesterday and I think today, we've seen the stock upping the base from 210 or rather 205 to now 215 to 16 levels, where it's hit today. So I'm expecting that if say for the next couple of days, the stock may move up higher to 215 to 16 mark again, but then the stock would probably get back into a consolidation. So in these kind of strategies, in these kind of stocks, it's best to try and just hold on to your existing quantity, because you're playing on buffer. If the buffer keeps on reducing for these stocks, then you may get a bit more impatient to try and exit the stock at the cusp of a breakout. So I think I would just suggest to hold on to the stock, not to add further.
All right, Sharmila, one more query from the cement pack for you. This query is from Baldev. He has bought JK Cement. His buy price is close to 2,600 rupees. He wants to know, can he stay put for the next 1 year, or he should move out at this price point and book profits currently?
No, absolutely stay put. I think that both from a numbers perspective as well as from a valuation perspective, I have great comfort in this stock. So continue to hold what you have.
With that, let's kickstart with the rapid fire then. And this one is coming from Vino, who's writing to us from Chennai. Wants to know about solar industries. Already invested in this one. Stay put with this one for the longer term. Sharmila?
I'm sorry, I never tried.
All right, Kunal, what's your take on CESE? Anjali has bought the shares at a price of just 66 rupees, sitting at great profits. Hold or book?
Continue to hold.
All right, this one is coming in from one of our viewers. I'm sorry, I missed the query. Here you go. This one is coming from Shankar. He wants to know about LIC Housing Finance. 422 is the buy price. What to do? Continue to stay put with this, making really good set of profits, Sharmila.
Yes, continue to.
All right, Sharmila, between Genus Power as well as HBL, any stock that you like for a fresh investment for the next 12 to 18 months? This query is from Venkatramani.
HBL Power.
All right, this one is coming from Mayank Saraf and Oriental Rail. Have you seen the stock? 250 is the buy price, Kunal. What sort of outlook you have for the next 2 years?
Sorry, don't track the stock.
All right.
All right, the next query is coming in on Asahi India. Kunal, if you can just quickly check the charts. Naman Dera has bought the shares. Average price is 680 rupees. Wants to hold it for the trading purpose. Your outlook?
Continue to hold on.
All right, this one is coming in from Ramamurthy and he wants to know about Olectra Green Tech. Is it a good time to invest at the current market price, Sharmila, Olectra Green Tech?
Yes, I think if you're a longer term investor, you can.
All right, Kunal Rima wants to have a long-term view on Patel Engineering. Average price is 64 rupees. Add more or exit?
Just hold on.
All right, this one is coming in from Tushar. He wants to know about a buying level coming in for RVNL. Kunal, do you think one can buy RVNL right now?
Not at current price, it's extremely overpriced.
All right, the next query that I have is coming in from Shri Kishore, and he has bought Azad Engineering. Kunal, his buy price is 2,000 rupees. What to do in the long term for this stock?
Looks attractive in case if it dips down to 1600, 1650 mark, look to add further.
All right, with that we come to the end of the rapid fire. Thank you so much, Sharmila, as well as Kunal, for joining us on the show, as well as talking about the IT sector and taking all of our stock-related queries. Thank you so much once again. And with that, viewers, we come to the end of this edition of Buy Now, Sell Now. So it's a goodbye from Shrishti, myself, and the team that put the show together. Stay tuned. Markets at noon coming up next.
India is poised for a leap like never before.
If you like this video, then like, share and subscribe to ET Now.